I am going to actually start from the beginning and just give a quick, brief overview of today's call. Again, I'm just going to say my name is Taryn Dorr. I am the Director of Economic Development. And with us today, we do have Katie Larson and Leah Benz with Morland Financial, and they are here to talk to us today about, sorry, I lost my place, employee retention credit and the payroll tax delayed deposit program. So thank you, ladies, for being here with us today. We appreciate it. We apologize again for the technical difficulties, and we will go ahead and get started.
Thank you, Taryn. This is Leah Benz, and I'm going to just share a little overview of the CARES Act, just to get us started before we get into the employee retention credit and the delay of payroll taxes. Like many of you guys know, the CARES Act was signed into law on March 27th, and it was intended to help small businesses that really needed some more funding to keep going. The first two items, the SBA grant and the SBA Economic Injury Disaster Loan, EIDL loans, they kind of go hand in hand. You fill out one application to qualify for this, and you fill that out with SBA directly. The SBA grant is a $10,000 grant that you can get, and something to keep in mind is that it's a grant, so you're not having to repay that, but it is taxable to you. So when you file your taxes next year, you will have to pay tax on that grant. The EIDL loan is a loan, so you'll eventually have to repay that, but the first 6 months are paid by SBA. The next thing that has been a really great thing that a lot of people have taken advantage of is the SBA Payroll Protection Program, the PPP loans. And around here, we've seen a lot of bankers and accountants reaching out to their customers directly and letting them know that most people can qualify for this program. Unfortunately, last week on Thursday, they ran out of funds, but they're working right now in Congress to try to get more fundings, and possibly today or tomorrow, they're working on getting that passed. It really applies to everyone. The provision is that it's for anyone who needs economic relief that was adversely impacted by COVID-19. And so that can be anyone who has payroll that they pay, or it can just be a self-employed individual, someone who has a Schedule C or Schedule F. They also can qualify for this as well. And it's based on your average monthly payroll times 2.5 times of that. And that's how much the loan can be for. And after an 8-week period, it can be forgiven, and if the funds are used for certain things. So if you have more questions on that, you really should reach out to your lender to see if you qualify and to get an application in with them, or your accountant can definitely help you fill the application out. The next two items, they're kind of new items that are being presented on through the EDC, is the employee retention credit, and Katie's going to go into the detail about that. And lastly, the delay of payroll tax payments. Something I want to note before we get too much into detail, if you do qualify for the PPP loan, you can't use the same funds to take advantage of the employee retention credit and the delay of payroll tax payments. So keep that in mind. If you've already got a PPP loan, you might not be able to take advantage of these. So Katie, would you like to tell us more on the employee retention credit?
So like Leah stated, the employee retention credit is part of the CARES Act that was just recently passed. This employee retention credit is a refundable tax credit against certain employment taxes. So for most of you, this would be Social Security, and that is wages equal to 50% of the qualified wages an eligible employer pays to employees after March 12th, 2020. So this credit is actually, it's a pretty in-depth credit, but we're going to stick to the basics, kind of going over everything. And we're still kind of anticipating some additional guidance coming out before the end of the second quarter to go along with this. So to get started, the eligible employers, there's two kind of main criteria to see if you are an eligible employer for this credit. One, you would be available to get this credit if you're an employer including nonprofits whose operations have been fully or partially suspended due to government orders. So here in North Dakota, people or employers who would be qualify for fully suspension would be kind of hair salons, and then the partially suspended would be bars and restaurants. And if that's not you, you can go to item number 2. And this is kind of an in-depth, this comes straight from the IRS. So it's a little complicated. So we're going to do the IRS guidance, and then we're going to give an example to kind of help give you kind of what it's actually talking about. So this second item, you're eligible if you're an employer who has experienced significant decline in gross profits. So that significant decline is described as beginning after December 31st, 2019, after your gross receipts fall below 50% of gross receipts from the same calendar quarter in the prior year, and ending with the calendar quarter following the first calendar quarter, beginning after a calendar quarter, which gross receipts are greater than 80%. So I'm sure that is clear as mud for most of you guys. So we've put together an example to kind of explain number 2. And so example 1, in quarter 1, 2019 shows gross receipts of $200,000. In quarter 1 of 2020 shows gross receipts of $90,000. So in quarter 1, gross sales have declined by more than 50%. So in quarter 1, you're eligible. So now we have to go keep going each quarter until you're above the 80% threshold. So in quarter 2, you're still eligible because we're at 60%. Quarter 3, we finally get to 86%, but in the guidance, it says the quarter following the quarter in which you get 80%. So in this example, you would be eligible for this credit in quarter 1, quarter 2, and quarter 3. And then quarter 4, you would no longer be eligible for this credit. So when we talk about eligible wages, employers with full-time employees in 2019 of 100 or less, all employee wages are eligible. If you have more than 100 employers or employees, only the wages of employees who are furloughed or face reduced hours as a result of their employee's closure or reduced gross receipts are eligible for this credit. And wages for this include health benefits paid by the employer, and it's capped at the first $10,000 in wages for an eligible employee. So we can talk a little bit about this credit. So this credit applies to wages paid after March 12th of 2020 and before January 1st, 2021. It's eligible up to 50% of employees' wages per employee, with a max of $5,000 credit per employee for the year. So we put together another little example. Example 2 shows employee 1 had annual wages. We're talking annual, not quarter. Employee 1 had annual wages of $6,000. So 50% of that would be $3,000. So the eligible credit for this employee would be for this employee would be $3,000. Employee 2, however, has annual wages of $20,000. So 50% of that would be $10,000. However, the max credit you can get per employee is $5,000. So this employee would be maxed out and get $5,000 here. Another thing to note, like Leah had stated, that you're not allowed to take this credit if you have utilized the PPP loan on those wages. And again, unfortunately, self-employed income does not qualify for this credit. So you guys might be asking where you take this credit. This credit is taken on your 941 beginning with the second quarter of 2020, or the 943 if you are an agricultural employer. Again, this credit is taken against the employer's share of Social Security tax, so that's 6.2% with the excess being refundable. So like I had stated before, there is a lot to this credit. This is kind of a simplified version to let you know that this credit is available and to see if you think you would be eligible. If this is something you think you would be eligible for, I recommend you talk to your accountant or payroll provider to discuss your exact situation. I know at our office, we've been doing webinars weekly, sometimes twice a week, to stay up to date on all the changes with this, as I would assume all other firms and accountants have been doing. So I guess at this time, if there's any questions relating to this, we can.
Do you want to keep going? Okay, we will keep going and take questions at the end.
Okay.
All right. We're going to move to the delay of payroll tax payments. So this could really apply to anyone who's paying payroll taxes. Before I get too much into it, I just want to warn everyone, this is something that we don't highly recommend, and from everything that we're hearing from the people that we're listening to, this is kind of the last case scenario thing that you want to do. If you're really running short on funds, this really is something that you kind of want to hold off to the very end to do. But the way that it works is it allows taxpayers to defer paying the employer portion of Social Security, the 6.2%, through the end of 2020. You can only do this through when the bill was passed on March 27th and ending at the end of this year. It also applies to self-employed individuals. So those Schedule C and Schedule F people who aren't actually paying a wage, but they have a net income on a Schedule C, they can qualify to defer paying on the employer portion of the Social Security tax of that 6.2%. The way that it will work is that you'll have to repay it, but they're giving you extra time, and they say that if 50% of the deferred amount is paid in through by the end of December of 2021, it's made timely, and the remaining 50% has to be paid in by the end of December of 2022. And like I talked about before, if you're getting funds from these PPP loans, you can't use the same funds to defer and not pay Social Security tax on that. And like I said, this is kind of a last case thing that we really like people to take advantage of. It's really hard to get ahead if you're behind on things like sales tax and payroll taxes. Those are things that they're not forgiven, and so you don't want to get behind on paying on those items. So try to do this as a last case resort. The next item that we want to move to, we want to just kind of give you an update on some things that we feel like are the most asked questions that we're dealing with right now. And individually, this affects everyone who's probably on the call today. It's called the Recovery Rebate Credit, also known as the stimulus check. A lot of people have probably already received their stimulus check, but you're eligible for $1,200 per person. A married couple can get $2,400, and you can get $500 per qualifying child of the taxpayer. Well, there's a little gray area on what's a qualifying child. If the child is under 17, you're going to get the $500 per child, but there's so many people out there who they have an 18-year-old or kids who are in college who are still claiming them on their tax return to take advantage of other things like American Opportunity Credit or Lifetime Credit, and they're missing out on this $500. Unfortunately, that's just the way it is right now. If you're concerned about where your stimulus check is at, we have included a link here that you can go to on the IRS website. If you go to the IRS website, you'll have to enter in some information. You'll have to enter in your Social Security number, your date of birth, and your address you use on your tax return along with your zip code. This is just verifying your identity. The IRS clearly knows what all that information is, but they just want to make sure you say who you say you are. And the next screen that you'll go to after you click on this, it will give you a little update. It will say you're eligible for the credit. You're going to be getting a refund. We don't have your direct deposit information. Please enter that information for us. If you have filed your 18 and 19 return, or if you have filed 19, they'll use your 19 information. And if you had direct deposit for a refund, they'll use that automatically. if you owed for 19, they will not have your direct deposit information, so you can enter that on this screen. If you haven't filed yet for 19, they will look at your 18 return and use that information. With that in consideration, this is a 2020 item, so they're going to reconcile this on your 2020 tax return. If you were entitled to more based on your 2020 income, if things are a little bit different, you're making less money because of all the shutdowns, you possibly could get more money back if you were limited on your credits. So this will be reconciled on your 2020 return. So you're not completely out of luck if you're not getting all the payments yet. So keep that in mind. The biggest thing on this is just be patient. Keep looking at this link and seeing if there's information that you need to enter. But try to be as patient as you can. They will get out the payments as soon as they can to you. There's nothing you can do to speed it along. The next thing that they put into place that can be helpful to businesses that might be struggling is they have waived the 10% early withdrawal penalty if you need to take funds out of a retirement account. This allows individuals to withdraw up to $100,000 from your retirement account without being subject to the 10% early withdrawal penalty if you're not retirement age. So if you need those funds to pay for some costs to keep open, you can do that. You can take the $100,000 out of a variety of different retirement plans. If you have some in IRAs or 401ks, you can take it out of one or a multiple of each of them. And the penalty is only not in effect for 2020. So after that, it's going to go back into effect. Keep in mind, though, that it's just a penalty waiver. It's not, you'll still have to pay tax on it. So you still have to pay the tax at your ordinary income tax rates. They have put in a little provision there to try to help with that. They say that there's a 3-year period that you can pay it, that you can pay the income tax on it. So if you want to space it out over 3 years and pay the tax over that period, you sure can. If you'd like to just take care of it right away, you can do that and pay it all at once. The last few items, speaking about retirement accounts, most of you on the call, probably this doesn't apply to you, but they have waived the RMD, the required minimum distribution amounts for 2020. So they're not requiring people to take their RMDs out in 2020. Some people might have already done so, but most people take those out at the end of the year. And what they're trying to do is they want you to keep your money in the stock market and hopefully try to rebound with the economy here. So if you're wanting to take advantage of that, you should notify your investment advisor and they can help you not take those payments this year. And the last thing that they did that we feel like is kind of important to talk about is they're allowing a charitable contribution deduction for individuals up to $300 above the line. So a lot of people make contributions to charity, but they might not itemize every year, so they don't get to take advantage of deducting some of those charitable contributions. And this year they're just trying to promote people still giving to charity and take advantage, give you a little something extra for doing that. It's only for cash items, so if you give a lot of items to like Goodwill, household items or clothing, that's not included in here. This would just be monetary things that you're donating. So these are just the few items that we feel are important to look at with the CARES Act and what's happened as far as tax-wise. If you have more questions, definitely seek out your accountant or your banker or some trusted advisor that you have and get more information on these items. With that,
Very good.
move to questions.
Yeah, I think we will. A quick question. What does above the line mean?
Above the line? Yeah. So that means above the line. It affects your adjusted gross income, so it reduces your adjusted gross income before your income tax is calculated. Most people, like I said, you are able to itemize if you have things like mortgage interest, real estate taxes, charitable contributions, you have to itemize. And with the new tax law that was passed a couple years ago, you have to have over, for a married couple, like $24,000 to take advantage of utilizing those items, because you just get the standard deduction or itemize whatever greater. So this is before that's calculated.
Okay. One other question I had on something you said. So if an employee loses their job but did not get a stimulus check because last year they made more money, that will come back around and they will eventually
Yes.
get that stimulus.
Yep.
Okay.
It will come in 2020. So when they file their 2020 tax return. Unfortunately, the timing, you probably need that right now, but this is the only way they really can reconcile that. And they're working so hard, and I know that some people are getting checks in arrears or they're not getting enough, but that's the trade-off of getting the funds as fast as possible. There's going to be some problems in the way that it's administered.
Very good. A question for you, Katie. Can you just reiterate quickly the businesses that should be watching out for these tax credits? Like, who specifically should be looking at this or calling their accountant at this time and saying, do I qualify? Who are those businesses specifically?
I would say if you are someone who was not able to take the PPP loan, and I mean, I still strongly recommend maybe holding out and waiting to see if they put funds into this.
Okay.
And I anticipate that they will. So maybe wait a couple more days. And if you aren't eligible to take, or you aren't allowed, or you don't get to take the PPP loan, the funds run out again, I don't know, and you are not a self-employed individual, you have payroll, then I think this would be a credit that you should look into applying. And this applies to the second quarter.
Okay.
So that's when you're going to start taking this credit. It will be in the second quarter. So you have some time to kind of evaluate what you've been able to take. And
Okay. Other than that, I think we had a few other questions, and I put them in front of Katie here. Any of these that you want to take a shot at answering?
yeah, so one of the questions here says, has the income tax deadline changed? As most of you have probably heard, they have extended the tax deadline to July 15th. That also includes if you're someone who pays quarterly estimates, your first and second quarter estimate also falls along with that, so you don't have to pay your first and second quarter estimate until July 15th. Again, all of the retirement things like that fall with this, just like it would be April 15th. They extended this because, I mean, accountants have been working crazy time, I guess, doing kind of getting updated with this, helping businesses apply for these loans, kind of just helping the businesses as much as they possibly can with this. So taxes have kind of been on the back burner a little bit.
Mm-hmm.
And then another question that we had was, can I apply for this loan and the payroll tax credit? I would assume that the loan they're talking about the PPP loan. If that's the case, you're not eligible to take the PPP loan and this tax credit on the same wages. So if you get the PPP loan and you pay your wages over that, say, 8-week period, and then those funds run out and you've already used those funds for the your payroll, and then in, say, quarter 3, you're eligible still for this retention credit, you would be able to take that credit as long as you fall with that criteria. You know, you're below the 50% gross receipts, or you're still partially or fully shut down. So yes, there is a way to take both credits, but you'll have to, I guess, be careful that you're not double dipping, basically.
Okay, and one more question in regards to the retention credit, are only full-time employees eligible?
It's full-time equivalents, they say. So this is going to be reconciled on your 941, so it's going to be those wages.
So if you had 20 part-time employees, would the equivalent be 10? Is that how that would work, or?
Well, it's not, the credit isn't, I guess, based off of employees.
Okay.
It's probably a little confusing because back in one of the slides we talked about eligible wages. So it says employers with full-time employees in 2019 of 100 or less, all employee wages are eligible. So if you're under 100 employees, then that credit is going to apply to all wages. It's not based on how many employees. So then the credit is going to say if I paid someone $6,000 in Q2, that employee, I would get $3,000 for that credit because it's 50% of the wages paid to that employee.
That makes sense.
So
The full-time equivalent, I guess the confusion there is that's a bigger deal in the PPP loans that's utilized there. So there could be some confusion on what a full-time equivalent and how it relates to all these different programs.
Okay.
And then I guess to go further, if you are an employer that has over 100 employees, then only the wages of employees who are furloughed or who have the employees that have faced reduced hours would be eligible for this credit. So I guess each individual is going to be different. So I think it's important for you to talk to your accountant or payroll provider and kind of go through, kind of look at the credit that they think would be available for you.
Okay. Very good. Well, do you ladies have anything else to add today? That was a lot of new information for me. I've spent my time learning these other programs, and this one's kind of
just be as patient as you can, and definitely if you think that you can qualify for something, reach out to whoever helps you, because they're probably pretty bogged down trying to do everything they can. So just be as patient as you can and just look into some stuff yourself too.
Yeah, I would say if you're on the fence whether you qualify for this credit or not, I think it's important that you reach out so that you can, I guess, get all the available resources you possibly can to help. I mean, these programs are out there to help these small businesses, and I mean, keep going.
Mm-hmm. Very good. I know locally here we've had our lenders, our accountants, attorneys have done such a good job of stepping up and helping our business community. So I would highly recommend reaching out to any of those people that you work with as part of your business to talk directly with you about your business. With that, I think we are going to close today. I do want to remind you, if you have questions for the EDC office outside of this program, or if we can help you get to a resource, submit those questions to businesshelp@bowmannd.com, and we will either refer you to the right person or try to help you if we can. Otherwise, definitely call your accountant, call your lender, attorney. Now is the time to reach out to them. They are working very hard to get educated on these programs, staying up to date on all the changes. So we definitely recommend reaching out to them. We have been bringing these business broadcasts to you weekly, and I think we are going to take a few weeks and bring you the next one here in just a few weeks. But we have Jason Matthews. He actually specializes in strategic planning, and he's going to help us talk through some strategic planning ideas for businesses and how they can plan to come out of this, or how to plan right now when things are so uncertain. So we do look forward to that. Watch for that marketing to come out. We will be emailing everyone that has been in attendance at these business broadcasts and beyond to our chamber members. So please watch for that. If you have additional resources that you would request that we try to bring on, please don't hesitate to let us know. Yeah, and so we're very excited. Thank you again for joining us, Katie and Leah. This was great. I know that I learned a lot, and we will just wish you all the best, and we thank you for being here today.